Hello everyone, welcome back to our weekly webinar series. My name is Faiza Hashmi. I am the tax director here at Chris Cooper. Today I have been joined by my colleague Mahar Afzal, who is the managing partner, and together we will be taking you through today's webinar. The topic of today is tax on commodity traders. If you missed any of our previous lecture, they are available at our YouTube channel. The handle for Chris Cooper is Chris Cooper. And if you have any questions, you can always email us at info@chriscooper.com, and we will be happy to respond. So let's move to our topic for today, tax on commodity traders. Now, who are traders? Persons who buy and sell goods are traders. The usual models are that they are buying either locally or they're importing goods. They are not doing any such value addition to those goods. And then they are keeping a margin and selling those goods to their customers. So those are usually how the traders work. And now these traders can further be classified into exempt person under the law, out of scope person, or taxable person. Further, in the taxable persons, they can be either resident taxable traders who are considered resident of UAE under the corporate tax law, or non-resident taxable traders if they are considered resident of some other country other than UAE. Under this classification, under the resident taxable traders, we then have natural persons or juridical persons. Now, natural persons are those who do not have a separate legal entity from their owners. So let's suppose like individuals or sole proprietor, unincorporated partnership, they are natural persons and they are one and the same as their company, and the ownership is the same. Now, juridical persons are those companies who have a legal separate entity from their owners, and they are some of the types can be like LLC or private companies, public joint stock companies. So those juridical persons can further be either incorporated in the UAE or they could be incorporated out of the UAE. So those who are incorporated out of the UAE, but they're controlled and managed from the UAE, then they will be considered resident taxable traders as well. And if they're incorporated in the UAE, they could either be incorporated in any of the free zones or they could be incorporated in the mainland. Now, under the free zone, if they are meeting the conditions for qualifying free zone person, then they might be doing activities of trading, or they might not be meeting some of the conditions and they might be non-qualifying free zone person. If they are qualifying free zone person, they might be trading qualifying commodities, or they might be trading non-qualifying commodities. Now, what are qualifying commodities? We will discuss in our later slides, but a free zone person who is meeting all the conditions and is a qualifying free zone person, they might be doing the business of trading. It could be trading of qualifying commodities, or it could be general trading, which would fall under the distribution of goods activity. So qualifying commodity traders. Now, these are the persons who are involved in trading of these qualifying commodities, and they are termed as qualifying commodity traders. And qualifying commodities are basically those commodities which are traded on a recognized commodities exchange market in usually their raw form. And they basically, there are different types of metals, minerals, energy, crude oils, agriculture commodities. So all these which are traded on a recognized commodity exchange market in their pure form, in the raw form, they are called qualifying commodities. So we are discussing the taxability of the traders who are dealing with these types of qualifying commodities. So trading of qualifying commodities not only include the physical trading activities of these qualifying commodities, but it also includes the associated derivatives of these qualifying commodities like futures, options, to hedge the risk of these qualifying commodities. And it is one important point is that it is not necessary that the qualifying commodities are actually being bought and sold by these qualifying commodity traders on the recognized commodity exchange itself, but they need to be one of those commodities. They have to be dealing with one of those qualifying commodities, which are those commodities which are traded on, like we discussed in the previous slide, that qualifying commodities are those that are traded on the recognized exchange. So it has to be one of those commodities which the traders are dealing in. They don't necessarily have to deal and do the buying and the selling through those recognized commodity exchanges. So when we keep on talking about recognized commodity exchange markets, so what do we mean when we say that? So that there could be a commodity exchange market established in UAE, or there could be an equivalent exchange market outside of the UAE. So basically, some of the example let's take for the those commodity exchange markets which are established in the UAE. Those are Financial Service Regulatory Authority of Abu Dhabi, Global Market, it comes under that. So there's one in Dubai as well. So if either that commodity has to be traded on these commodity exchange market, which are there in the UAE, or they could also be traded on an equivalent commodity exchange market outside of the UAE. The condition are they should be licensed and they have to be overseen by regulatory authorities. We could take the example of London Metal Exchange. So if any of the products are being traded there, then they will also fall under the qualifying commodity. So in the first slide, we saw that the traders, they can be exempt persons, they could be out of scope persons. So an exempt person or trader, basically under the corporate tax law, they are government entities, government control entities, entities engaged in extractive business, entities in non-extractive natural resource business, and all the rest of them. So all of these fall under the exempt category under the corporate tax law. For out-of-scope traders, they could be the natural person who are living in the UAE or out of the UAE, but they're not doing any business in the UAE. They could be non-resident juridical person who do not have any PE or UAE source income or no nexus in the UAE. Foreign PE for a resident person, which have opted not to be taxed and not to include the income and expenses. There could be other examples like transparent partnerships or funds, trusts, family foundations. So if we go to our first slide, we were talking about that traders could be exempt persons or out of scope person. We just discussed who are those people. And now we'll concentrate on what is taxable traders. So under the taxable traders, you can see there's resident taxable traders and non-resident taxable traders. Non-resident, like we said, they are not resident of UAE. The example here, who can be taxable are PE of a non-resident person or any UAE source income of theirs. Under the resident taxable person, we will be now discussing the natural person, what's the treatment for the juridical persons who are either incorporated in UAE or incorporated out of the UAE but controlled and managed in the UAE. So the resident natural person who are qualified commodity traders, like we discussed before, they could be sole establishment, unincorporated partnership or freelancers who are operating in the UAE. Now, they are subject to the same tax as they would have been if they were inside the free zone or outside the free zone. It's the same for natural person. If their gross revenue is less than 1 million in the calendar year, in the Gregorian calendar year, then it is they will be exempt. If their gross revenue is more than if there's less than 3 million, but more than 1 million in the current year and previous year, they can qualify for small business relief. This relief is available till December 31st, 2026 at the moment. So if their revenue is more than 3 million in the tax period, then 0% tax would be there on income of up to 375,000, and anything over and above 375,000 dirhams would be taxed at 9%. So this would be the treatment for resident natural person under the corporate tax law. And the same will apply for the traders. So now we can concentrate on juridical persons. So juridical person, the resident person can be either incorporated in the UAE or incorporated out of the UAE, but controlled and managed in the UAE. So the treatment for any legal companies who are basically in the mainland, it is the same 0% up to taxable income of 375,000 and 9% above the taxable income of 375,000. This is the same treatment would be for the companies who are incorporated out of UAE but controlled and managed from the UAE. And if somebody is not meeting the condition of a qualifying free zone person, then the same taxability of 0% up to the taxable income of 375,000, and anything above that is 9%. The same will apply to them. So there are certain exemption or relief, you can say, available to the qualifying free zone person if they are dealing in qualifying commodities, and also certain traders of non-qualifying commodities, which we are not discussing today, but if they are meeting the criteria for that activity, like being in a designated zone, or the customers are not end users, or they're meeting the de minimis requirement, then they can also enjoy the 0% rate. But right now we will be discussing what is the taxability for those traders who are trading in the qualifying commodities, especially those. So the non-resident juridical person, so either it could be a PE of a non-resident person in the UAE, then that will also be subject to the same taxability, 0% up to the taxable income of 375,000 and 9% over that. And any UAE source income of a non-resident person will also be subject to tax, but it will be subject to withholding tax. And at the moment, the rate of the withholding tax is 0%. And so this could change in the future. But at the moment, this is the 0% withholding tax will be applicable on it. Now I will hand it over to Mahar, who will take you through the rest of the presentation.
Hello, everyone. Thank you very much for joining us once again. Thank you, Faiza. Whatever we are discussing today, we are discussing qualifying free zone person, and we are discussing the qualifying free zone person whenever they are dealing with the qualifying commodities, and whenever they are dealing with the qualifying commodities with the non-free zone person. This is the core agenda of the basically. This is a core topic. We'll be discussing though the question arises, who is the qualifying free zone person? The question arises, which are qualifying commodities. So the question arises where the qualifying free zone person, okay, based, is it a normal person, juridical person, natural person, juridical person? All these questions arises. And we have already discussed, just in Faiza has discussed, that these persons can be taxable trader, can be natural person, juridical person, the juridical, the resident, non-resident persons. So this qualifying commodity relief, which is 0%, this is only available, this you can see in this slide. This is only available to the whenever there is a resident juridical persons which are qualifying free zone person, they are dealing with the non-free zone person dealing with the trading of the qualifying commodities. It will remain our focus. Now the question arises, we are just reversing back from here. Qualifying free zone person. Whenever the person is dealing with the qualifying commodity, the person must be a qualifying free zone person. And what are the conditions of the qualifying free zone person? We'll discuss what are the conditions for the person become a qualifying free zone person. Then this person must be based in the free zone. Then this person must be incorporated in the UAE. Then this person must be a juridical person. Then they become a resident taxable trader, and they will be dealing this qualifying commodity that can be 0%. Yes. So we all know what are the conditions to be qualifying free zone person. These are the 6 conditions. I think we have discussed so many times. So many times we have already discussed what are the conditions to become a qualifying free zone person, not elected to corporate tax, because they are by default deemed qualifying free zone person. All the companies which are not natural person, which are incorporated in the free zones, by default they are deemed qualifying free zone person, unless and until they are natural person. Natural person cannot become a qualifying free zone person. They need to maintain the adequate substance industry. They need to comply with the transfer pricing policies and procedure. They need to drive the qualifying income, meet the de minimis criteria, have the audited financial statement. Whenever they are asking, they need to be driving the qualifying income. This qualifying income can come from the qualifying free zone, from the free zone person. It can come from the non-free zone person as well. From the non-free zone person, there is an option with the qualifying activity. One of the qualifying activity while dealing with the non-free zone person is the qualifying commodity. So these are the 6 conditions for the juridical person, which is a free zone person, to become a qualifying free zone person. So if this qualifying free zone person is based in any free zone, and this person is dealing with the other free zone person, might be this person is here or might be this person here. So they said income of this qualifying free zone person, qualifying free zone trader, income of this qualifying free zone trader will be considered qualifying income, provided this is, they are not generating the income from the other free zone person, which are excluded activities, and the other free zone person at the end is the beneficial recipient of the goods. So if the trader is based here in the free zone, a trader is the qualifying free zone person, and this trader is selling any goods to other free zone person, this trader is selling to any goods to same free zone person or other free zone person. In both of the cases, income generated by this qualifying free zone trader will be considered qualifying income, provided this is not from the excluded activities, and this income that the goods are being sold to the person who is the beneficial recipient of the goods as well. So this is the first thing. Second thing, this qualifying free zone trader can sell the goods here out of the free zone, and this person can sell the goods here as well, because this is a trader, and trader can sell the goods on the mainland. Trader can sell the goods out of the UAE as well. So they can sell in the free zone, in the mainland, and out of the UAE. Whenever this trader is selling any goods to the non-free zone person, might be here in zone 3 or zone 4. Zone 3 means mainland, UAE mainland. Zone 4 means out of the UAE. They said if this trader is selling the goods to their domestic PE or the foreign PE, domestic PE or here the foreign PE, in these cases it will be considered non-qualifying. It will be straightforward subject to tax. And if this trader is selling qualifying commodity, MMEA, that we have already discussed, MMEA, MEEA stands for mineral, metals, energy, agriculture. So these are the qualifying commodity. These are the raw form. If this qualifying free zone trader is selling MMEA, mineral, metal, energy, or agriculture products, these are in the raw form. And if this person is selling and the person to whom these goods are being sold out of the UAE, and the person to whom these goods are being sold, the person is not domestic PE, foreign PE, then they said, law said this income will be considered qualifying income as well. The conditions are, what are the conditions? The conditions are the person is a qualifying free zone trader. Goods are being sold out of the UAE, goods are being sold out of the free zone. The goods are in the raw form. The goods are being traded in the recognized commodity stock exchange. If all these conditions are being fulfilled, the income generated by the qualifying free zone trader by selling these goods out of the free zone will also be considered qualifying income. So this qualifying income we have already discussed. These qualifying income, they can derive income from the free zone person. Might be this qualifying commodity trader can sell to the free zone person. They will be generated qualifying income provided the free zone person are the beneficial recipients of the good. These are the not excluded activities. Revenue generated from the non-free zone person provided this trader can generate by qualifying commodities by selling the goods out of the free zone. And these are the same that we have discussed earlier. So here is the change basically. Now the qualifying free zone trader can sell the goods out of the free zone other than PE, local domestic PE or the foreign PE, MMEA, qualifying commodities. Basically, this qualifying commodity they can sell out of the free zone to any person other than PE, to any person other than domestic PE or the foreign PE, and the income generated by this qualifying free zone trader will be considered qualifying income. So if we are putting into this diagram will also remain the same. With a qualifying free zone trader, this qualifying free zone trader might be there generating the exempt revenue. And further has already discussed from where they can generate the exempt revenue. These are the categories for the exempt revenue. This qualifying free zone trader will not be falling here because this is extractive business. They will not be falling. This is a non-extractive business. They will not be falling here. They will not be falling here. They will not be falling here. Not here, might be yes, ancillary activity here. Only there possibility that the qualifying free zone trader is a government entity or this qualifying free zone trader is being owned by the government entity. If these conditions, the two conditions are there, means this qualifying free zone trader will become an exempt person based upon this. So there is a possibility this qualifying free zone trader is generating exempt revenue that will not be subject to tax. Taxable revenue, this taxable revenue can be 9%. Might be this trader is selling the goods to domestic PE and foreign PE, that will be straightforward subject to tax. And if they are generating any other income from the other assets as well, I mentioned here. The important thing is here, this qualifying activities, this qualifying revenue of the qualifying free zone trader, the qualifying revenue of the qualifying free zone trader from the non-free zone person, it will be from the qualifying commodity only. We have already discussed what are the qualifying commodities. Now, what is the financial statement requirement? There is no change of the financial statement requirement. The financial statement requirement will remain as it is. Like if the qualifying free zone trader, if the revenue is less than 3 million, may apply for the cash basis of accounting. Audit is not compulsory for the qualifying free zone traders. If the revenue is more than 3 million and up to 50 million, then in this situation, they may apply IFRS for SMEs, and audit is not compulsory for them as well. And if the qualifying free zone trader, the revenue is more than 15 million annually in a tax period, then they need to apply the full-fledged IFRS, and audit is compulsory for them. So as we discussed, going back to this diagram, we said if this qualifying free zone trader is dealing with the free zone person. This free zone person may be in the same free zone. There is a possibility that this free zone person is based in the other free zone. Might be here, might be here. In both of the cases, they said the income generated by the qualifying free zone person will be considered qualifying income, provided that the person to whom these goods are being sold, the beneficial recipient, the income is not generated from the excluded activities. What are the excluded activities? Basically, this trader, if selling the goods, okay, to natural person, that will not be considered his qualifying income. I'm coming back. These are excluded activities. Now the qualifying free zone trader, they will not be in the banking business because they are a trader. This trader will not be in the insurance business. Yes, they will not be in the insurance because they are the traders. Now financing, leasing, there is a possibility might be they have any asset, or along with this, they are giving this asset on lease and temporary. Although this is not their business, their typical business is buying and selling the goods. If I'm asking at the very precisely, I will say the qualifying free zone trader will not be involved in the leasing and activities, so principally should not be applicable to them. But there is a possibility, might be that they have any asset. If they have any asset, they are giving this asset on lease, then leasing activity other than this, which has been excluded activities, it will not be considered qualifying activity. They will, the same thing applicable on the immovable property as well. Other incident, important thing is basically out of this, the most important thing is if the qualifying free zone person is selling any goods to the natural person, this, then they will not be falling in the qualifying income. They will not be generating the qualifying income. Other than this, most of the cases, they will be generating the qualifying income because the qualifying free zone person trader, the person who is buying and selling the commodities, they will not be in the banking business. They will not be in the insurance business. They will not be in the leasing business. They will not be in the immovable property, except might be, yes, there is a possibility they have a building, they are using it for business purpose, they are selling, income generated from them. There is a possibility that income can become a qualifying income. Otherwise, it will not be falling specifically under the excluded activities. The core business is basically buying and selling the good. We'll discuss in coming slides as well. So if this qualifying free zone person, if this qualifying free zone trader is selling the goods to the natural person within the free zone, even the natural person is the beneficial recipient of the goods, still it will not be considered qualifying activity because net transaction with the natural persons are falling under the excluded activity, and there are these exemption, and selling of goods, this is not falling under this exemption. So I believe everyone is clear that if the qualifying free zone person is selling goods within the free zone, 99.99% cases they will be selling it to the commercial transaction by B2B transaction. B2B transaction will be considered qualifying income. B2C transaction will not be considered qualifying income. The rest of the all activities are not applicable to them unless any activity performed there which is incidental to the activity where the goods are being sold to the other free zone person, which is not the natural person. Okay, now the qualifying activity. This was the basically what I would discuss. This qualifying free zone person is dealing with the other free zone person in the same free zone or non-free zone, sorry, in the same free zone or other free zone. Now there is a possibility that this qualifying free zone person is selling the goods to zone 3 and zone 4. If this person is selling, if the qualifying free zone trader is selling the goods to the zone 3 and zone 4, and this is not being sold to the domestic PE, foreign PE, then the law says, even it has been given that this will be considered trading of the qualifying commodity will be considered qualifying activity. This is number 3. So qualifying free zone trader, if selling the goods which are in the raw form, which are being traded on the recognized commodity stock exchange, and the goods are being sold to any other person out of the free zone, which is not their domestic PE or the foreign PE, then any income generated from those goods will be considered qualifying income, provided rest of the all conditions of the qualifying free zone traders are being met. And rest of the all conditions for the qualifying free zone traders are 6 conditions that we have already discussed. So the focus will remain on the qualifying free zone commodity trading. But whatever we have discussed, whatever Faiza has discussed, whatever I have discussed, just I wanted to recap. And the recap is traders, these traders can be exempt person. We have already discussed the possibility. 2 categories are there, that the traders are the government entity or government controlled entity. They will be exempt. If they are doing any other business along with this as well, then we need to assess the revenues and expenses proportionately. The outer scope traders means if the traders are based anywhere across the globe, they have nothing to do with the UAE, then it will be considered outer scope. Suppose one trader is based in the USA, they are buying, selling the goods in the USA, their management is based there, then it will be considered out of the scope state forward for the UAE. Other than a taxable person, taxable traders basically. These taxable traders can be classified resident taxable traders or non-resident taxable traders. So they will be resident taxable trader if they are the juridical person. If these traders are the juridical person incorporated in the UAE, then it will be considered taxable traders, resident taxable traders. And if these persons are being registered, if these traders are being registered out of the UAE, even they are buying and selling the goods out of the UAE, the trader is registered in the USA, they are buying in USA, they are selling in USA, but their management is based in the UAE, from where they are taking the final decisions. Board is their final decision maker in the UAE. Then we will say these traders are being controlled and managed in the UAE. Their worldwide income will be subject to tax in the UAE. Third category is the natural person, as I discussed. Natural persons who conducts the business in the UAE, they will be considered resident person as well, and their income related to the UAE business will be subject to tax in the UAE. These are the different categories of the taxable traders. These are the resident taxable traders. There is non-resident taxable traders. Non-resident taxable traders means if there is any company, trading company based in Africa, that company has a PE in the UAE, that PE of the African company will be considered PE of the non-resident person. It will be considered then non-resident traders in the UAE, and the income attributable to the PE of the UAE will be subject to tax in the UAE. And there was second possibility, if they are buying and selling in the goods in the UAE, any company which is based anywhere across the globe, they don't have any PE in the UAE. PE, we know when the PE will establish, they will have branch, office, exclusive agent, nothing like this, but they are selling the goods in the UAE. Whenever they are selling the goods in the UAE, they will be considered non-resident taxable person. And when the UAE customer will be making payment to these non-resident traders, 0% withholding tax will be applicable at the time of making payment to such non-resident traders. The nexus will not be applicable in their case. The nexus specifically the juridical person, they must have building. There is a possibility, might be they are the trader, they have the building in the UAE as well. If the company owns the building, the traders in Africa, they are buying and selling in the UAE. Even they are not buying and selling in the UAE, they have only nexus in the UAE, they own any building in the UAE. If the any company that owns building in the UAE, that will be considered nexus in the UAE. If the individuals owns the building, doesn't matter, it is not subject to tax, as we know. But if the foreign company owns any building in the UAE, the same trader, as we said, the same trader, they are buying, the selling the goods at the same time, they the owner of the one building which is based in the UAE, then it will be considered nexus in the UAE. They will be liable to register in the UAE. The income related to that building will be subject to tax in the UAE. So these are the different situation. Important thing is these taxable traders, as we discussed, we have discussed this category. Natural persons, we discussed this thing as well. We have discussed things as well. I just wanted to highlight what I wanted to highlight. These qualifying commodity traders will be falling under this leg. If you are going, because this category we have already discussed, Faiza has already discussed in detail. Natural person, either they are in the free zone, either they are on the mainland. Their tax treatment is same. It will not basically, if up to 1 million exempt, 1 to 3 million, they can go for small business fee. More than 3 million, they will be subject to tax. Up to 375,000, 0% tax. Beyond that, 9% tax. Now the question is juridical person. Now the juridical person, important thing is they are in the free zone or out of the free zone. If they are in the free zone, they can become a qualifying free zone person. That qualifying free zone person can generate income from the trading of the qualifying commodity. That is our main focus of our today. We'll be discussing in the next guide as well, next slides as well. So this juridical person can be LLC, LLP, they can be annual business income is more than 3 million, liable to register and submit the return, incorporated in the free zone, they can become a qualifying free zone person. This qualifying free zone person dealing with other free zone person, we have already discussed possibilities that they will be generating income from B2B. If they're generating B2C, it will be subject to tax. B2B, these will be considered qualifying income, provided all other conditions for the qualifying free zone person trader are being fulfilled. Now this qualifying free zone person, there is a possibility that they are dealing with the non-free zone person. If they are dealing with the non-free zone person, now we need to look into this. Whenever they are dealing with the non-free zone person, either they are dealing with the qualifying commodity or they are dealing with the non-qualifying commodity. If they are dealing with the qualifying commodity, the law says it will be their qualifying income as well, and their income will be subject to 0%, provided they are not dealing with the PE of the non-resident person, PE of the qualifying free zone trader. It means local PE, foreign PE, whatever. We have already discussed this. So trading of the non-qualifying commodity, it will be subject to tax. It will not be straightforward subject to tax at 9%. If that basically this here it has been corrected as well. If the qualifying free zone person, if the qualifying free zone trader, they are dealing non-qualifying commodities, yeah, if they are dealing with the non-qualifying commodities, yeah, it will be straightforward. Sorry, it will be straightforward subject to tax at 9% because there is no concept of 0% corporate tax up to 375,000. It will be straightforward subject to tax at 9%. Yes, 0% and 9%. This is correct. This is correct. This is correct. This is correct as well. Non-qualifying free zone person, this is correct. Yeah, these all are correct. So if the qualifying free zone trader, they are generating income from the qualifying commodities while making any transaction with the non-free zone person, which are not that domestic P and foreign P, that income will be qualifying income provided all other conditions of the qualifying free zone traders are being met. And any income other than that will be straightforward subject to tax at 9%. Resident, non-resident, we will discuss. Coming back to the slide, basically, qualifying commodity, we know this. Qualifying commodity traders, we have already discussed. Qualifying commodities, we have already discussed. MEA, metals, minerals, energy, and agricultural commodity. We discussed that it should be in the physical trading activity. Discuss these are bought and being sold in the recognized commodity exchange, but this is not compulsory that the goods are being sold because they are basically listed. These are bought and sold. Actually, you can buy and sell the goods out of the exchange as well, but these goods must be listed on the exchange, and from the exchange you can buy and sell. But there is a possibility that you are buying and selling out of the exchange as well, provided those goods are listed on an exchange. What are the recognized commodity exchanges is referred to the commodity exchanges that established in the UAE and regulated by the regulatory authority. There is a possibility that the exchange are established out of the UAE and based upon the same parameter, London Metal Exchange. We have already discussed, we said commodity should be in suitable form because whenever we are extracting the commodity, it can be agriculture, minerals, metals, to make them that these are saleable conditions and they can be listed on the commodity stock exchange. Definitely there will be some sort of requirement. There will be initial minor processing. Those minor processing will not change the shape of the commodity. It will be minor processing. So once they are minor processing, they still say it will be considered a qualifying commodity. They should be a suitable form for trading on the recognized stock exchange. Like they have given an example that we are extracting the gold, making it, purifying it, removing basically rest of the items. Like once we're getting the pure gold, then we're listing the pure gold that is 99.4% pure gold, then it will be still considered qualifying commodity. Raw form, we already discussed, this is the natural and unprocessed state. The goods are in the natural and unprocessed without any value addition or minimal processing state. It will be considered raw form qualifying commodity. Like this cotton, we'll discuss in the guide. Cotton, when the cotton is ginning process, seed has been separated from the cotton, and they say seeds has been separated from the cotton. Still, it will be considered raw form qualifying commodity. Qualifying commodity, raw form, example, agricultural commodity like wheat, corn, soybean, energy commodities like the crude oil. When we're extracting the crude oil, there's a mud along with this, oil is this. When we are purifying, basically, we are removing the oil, removing mud, removing sand, and separating the oil. Then still this oil will be considered, it will be considered raw form commodity. Metal commodity, gold, silver. Then the core income generating activity, core income generating activity for this qualifying commodity traders are buying and selling. The only one activity is basically buying and selling the goods. This is their core qualifying activity, nothing other than this. But if you go into the distribution business, we'll discuss the distribution as well. So if the qualifying activity of the qualifying free zone trader is buying and selling of the goods, there can be ancillary activities. If there are ancillary activities like you are warehousing, you are delivery losses, if you are buying and selling the goods along with this, at the same time, whenever you are buying the goods, you are storing, then you are selling to the customer. This buying and this storage and this transportation, this is ancillary activity. Buy, storage and delivery is ancillary activity. So it will be considered a qualifying activity as well. But if you are providing only warehousing services, you are providing only delivery services, you are not involved in the business of buying and selling of the qualifying commodities, then this it will not be considered a qualifying activity. We need to look at the provisions of the law. But along with this, if you're buying and selling the goods, along with this, you are providing warehousing and delivery services, that will be considered qualifying activity. HSN code indicator they have given in the guide. Basically, they said you need to look into the HSN code. HSN stands for Harmonized System or Nomenclature. You need to look into the HSN code of the commodities to assess is this in the raw form or is this not in the raw form. So you need to assess, you need to look into the HSN code of the commodity, and you can, what is the HSN code? The HSN stands for Harmonized System and Nomenclature. I mentioned here as well. Then introduced by the who was introduced? This was introduced by the World Customs Organization. They are systematic way to allocate specific code to each commodity based upon their status. They have allocated this code already more than 5,000 products across the globe, and these codes are globally acceptable across the globe. Countries across the globe, custom authorities are accepting these codes. So specific number has been allotted to each product based upon the status of the product, based upon the stage of purifying of the product, ingredients of the product. So based upon the, it has been given in the guide, based upon the HSN code, you can assess is this in the raw form or is this not in the raw form. Now you'll be thinking one important question, that you are in the free zone, why you can't consider yourself in the distribution business. So I just put few lines here for the distribution business and for the qualifying commodities. First of all, for the distribution business, you must be based in the designated zone. But for the qualifying commodity trader can be based in any free zone. This is the first thing. Second thing, the distribution company, they need to maintain the adequate substance within the designated zone. And qualifying free zone trader, they can maintain the substance in the free zone only. They are not necessary to be in the designated zone. Third, if you're looking into the qualifying activities, core income generating activities of the distribution business, they are asking purchasing, sale, warehousing, transportation, inventory, order processing, packing, repacking. This is all part of the distribution business. But if you're typically going into the qualifying free zone trader business, they are asking buying and selling the goods. And there are two ancillary activities, storage and transportation. And third important thing is that the qualifying, being a qualifying free zone person, you must be selling the goods to the reseller anywhere across the globe. But as a qualifying free zone trader, you can sell these goods to anyone out of the UAE, anyone in the UAE. Then we need to assess, okay, if qualifying income, non-qualifying income. If you are selling in the UAE, the free zone criteria is same for the qualifying free zone distributor, because they will be selling in the free zone, and the qualifying free zone trader needs to be selling in the free zone. If the generator wanted to generate a qualifying, out of the free zone, the criteria is basically out of the free zone, law says the distribution must be selling the goods to the reseller, and this condition is not applicable for the qualifying free zone trader. So I believe everyone is clear. I am just going quickly to the guide. So everyone is clear. If there is a qualifying free zone trader, this qualifying free zone trader is buying and selling, selling the goods to non-free zone person. These are the qualifying commodities in raw form, MMEA in raw form, qualifying commodities that are listed in the recognized commodity stock exchange. Any income generated from such commodity will be considered qualifying income, provided all other conditions of the qualifying free zone trader, the qualifying free zone persons are being met. Let's go through the guide very quickly. Okay, trading of qualifying commodities. For the trading of the qualifying commodities, okay, what has been written here? Trading of the qualifying commodities, physical trading of qualifying commodities in associated derivatives, which are being used to hedge the risk related to this buying and selling of the commodities. Then these qualifying commodities refers to metals, MEA, metals, minerals, energy, and agricultural commodities that are being traded in the recognized stock exchanges. And this is the definition given for the recognized stock exchanges. Qualifying commodity needs to be in the form recognized stock exchange. Might be you need basic processing. If you need very basic processing to make them saleable on a commodity stock exchange, it will not be considered that you are changing the shape of the good, you are adding any value, still it will be considered a raw form commodity. The trade itself does not to be performed through the exchange. That is very important. The trade that you are conducting, this trade should not be performed through any exchange. That the gold is being considered, given gold example we have already discussed. The raw form, they said that typically these trading commodities must be in the raw form. They are natural and unprocessed state. No value has been added to the qualifying commodity once it was grown, extracted, or mined. And these example they have given, for instance, agriculture commodities, wheat, corn, and soya bean. Energy commodity, they have given example of crude oil and natural gas, where you are separating basically you are separating the oil from the sand. Metal commodity, they have given example gold, silver bars, aluminum ingots. And they said some degree of processing might be required. If some degree of processing required, they give an example like you are extracting gold, removing impurities, making it pure, making it in a saleable condition. Still, it will be considered the commodity is in the raw form. Then they give an example of crude oil. Crude oil example, you are getting the crude oil, removing impurities, removing sand, and making the oil separate from the sand. Still, it will be considered in the raw form. And this is a fertilizer like phosphate, rock, potash, and nitrogen may be processed into various types of fertilizer like DAP, MAP. They said it will be considered that any value has not been added. The commodities are in the raw form. Cotton, ginning of the commodity, separating seeds from the cotton, it will be considered basic initial processing. You are not changing the shape, you are not adding any value. HSN code we have already discussed. You need to look at the HSN code. HSN stand for homogeneous. What is this called? Nomenclature. Homogeneous. What was the word typically, basically? HSN code. Homogeneous system of nomenclature. What was the exact word? Harmonized system of nomenclature. You need to look into the HSN code. HSN code, as we discovered, basically HSN code developed by the custom authorities, more than 5,000 products, globally acceptable, based upon the systematic way of allocating specific number to each product. You can look into the HS code and you can assess, is this in the raw form or this is a not in the raw form. Then undergone minimal processing. If minimal processing is required, you can say still this is in the raw form. Buying and selling of the good, this is the qualifying activities. Other ancillary activities are warehousing and delivery. But if these warehousing and delivery are being provided on standalone basis, it will not be subject to, it will not be considered qualifying activity. It will be considered taxable activity. Just look into this example. This example are typically based upon this thing, only on buying and selling, warehousing and delivery. There's a company X, a Frisian person is engaged in the trading of metals. It is a strong relationship with the aluminium manufacturer that produces high quality, high grade aluminium for the various industries. The market price for aluminium is 9,500 per ton, and the company X negotiate to buy 10,000 tons at a highly discounted rate of 9,250 per ton. To company X, they are buying aluminium. They are given 1%. Okay, they what are the price they are buying? They are buying in 9,250 per ton, total 10,000 ton. Now the company X finds the buyer. Company X is buying, company X is selling. Company X is a qualifying free zone trader. Company X is the qualifying free zone trader. This company X is buying the goods and selling to buyer to find a buyer in the automotive industry who needs a large supply of the aluminium. Okay, they are selling to buyer. Buyer is out of the free zone. 10,000 tons. Current price 9,500. Total sales is 95 million. Buying price 92.5. Selling price 95 million. We are not bothered. We should not be worried what is the buying price. We should be worried about the sale because we need to look in the sale. Whatever purchase they will allow for sure. It will be considered deductible for tax purposes. In addition to the above, as part of a trading business, company X arranges the necessary storage and warehousing facilities. Storage and warehousing, whatever we have discussed. If this storage, if this warehousing is an ancillary business, then it will be considered qualifying activity. Non-ancillary standalone basis, it will be taxable. Now they bought the aluminium, they will store it. Then they will provide the transportation, might be the Incoterms or DDP, DDU, whatever the Incoterm it has been signed with them. They need to provide the transportation as well. Once they are providing the transportation, delivery, so selling, storage, delivery, buying, all these are qualifying activities. So whatever they are written here, the total revenue of company X from the transaction is 95.2 million, out of which 250,000 relates to the warehousing and delivery activities. Warehousing and delivery performed by company X to execute the main activity of trading and qualifying commodity. These activities are closely related to make a minor contribution to the qualifying activity of trading company. These activities are ancillary, and the other entire revenue will be treated as a revenue generated from the qualifying activities. So whatever we are trying to highlight, basically, if you are providing the warehousing, you are providing the transportation, these are the ancillary activity related to the main activity of buying and selling of the goods. So then this activity will be considered qualifying activity as well, and the whole income will be considered whole revenue will be considered qualifying revenue. So this is over from my side. If you have any specific question, you can ask. Okay, guys, thank you very much and have a lovely evening. Thank you very much.
Thank you, everyone.
Okay, Faiza, thank you very much. Thank you.
Thanks for watching the video. Click on the bell and subscribe to the YouTube channel.